Welcome, everyone. Thank you for joining us for this important industry discussion. I'm Nikki Jovicic from LookUpStrata, and I'm also the Managing Director of Tower Body Corporate, and I'm your host. This webinar will explore the critical issue of strata management fees in Australia, a topic that has sparked debate and raised concerns about affordability, value, and the industry's sustainability. Today, we discuss various practical solutions for creating a sustainable strata management ecosystem. Our panel, representing diverse perspectives from across the strata sector, will unpack the complexities of strata management fees, discuss the challenges faced by lot owners and strata managers, and explore innovative approaches that will hopefully provide a fair future for all. Now, why is LookUpStrata holding this session? Because we're committed to fostering open dialogue and exploring solutions to key industry challenges through webinars and other formats. This webinar is designed to encourage deep consideration. So instead of focusing on a single solution, we aim to spark discussion and facilitate critical thinking by highlighting the complexities of the issue. As LookUpStrata takes our transparency responsibilities seriously regarding partnerships, I'd like to mention that both Premium Strata and Realmark Strata have been long-time sponsors of LookUpStrata. And also, as I mentioned at the very beginning of the session, in addition to owning LookUpStrata, I own Tower Body Corporate. And before we begin, I'd like to mention that the information in this session, including the discussions arising from chat conversations, is not advice and should not be relied upon as advice, and you should seek independent advice before acting on any information contained in the session. So we'll jump straight into it. We've got an awful lot to get through. So to begin with, we have Will Marquand, General Manager and Senior Body Corporate Manager at Tower Body Corporate. Will shares his insights on how lot owners can evaluate body corporate contracts and understand the different value propositions offered by strata managers. Will, thanks for joining us.
Hi, Nikki. Thanks for having me today. Speaking first, I think it falls on me to set the scene a little bit. And I think we have to reflect that it's been a pretty bad year for strata managers reputationally. Obviously, we've had the reports from the ABC on commissions and more lately the contracts. And, you know, while those behaviours that have been reported might not reflect the whole industry, they are damaging to us collectively. And as a group of professionals, we have to consider what that means for the industry. It seems like changes are probably around the corner. That might be driven by state management banning commissions. But whether or not that happens, it might also just be driven by market forces. That's from, you know, body corporate customers demanding different and better services from their body corporate management companies. And whenever you've got change in the air, you've also got a lot of anxiety, and you've also got a lot of people who are getting nervous about that. But personally, I don't really think this is a time for body corporate managers to be feeling anxious. We've got growth in the industry is exponential. The percentage of people living in strata buildings is increasing. It's almost 20%, and probably up to 30% in the next decade or so. So there's ever increasing demand for our services, and there's an increasing demand for a variety of services as well. So I think there's a huge opportunity for the industry over the next 10 years to provide, you know, better quality, higher quality strata services. And personally, I sort of think that managers should be leaning into this opportunity and what the future holds, rather than spending their time defending old models of management that I think are past their sell-by date. What I wanted to focus on briefly is that the change that's going to happen is going to be driven by both management agencies and strata customers. And we have to sort of face a reality in the industry as well that many strata owners aren't really taking responsibility for their buildings. And if you want kind of evidence for that, we just have to look at the low numbers that are attending AGM meetings, or how difficult it is to achieve a quorum. Or as a manager, I can tell you how often I send out an email that doesn't get any response. And I think some of the problems that you're seeing in the industry today are a manifestation of that kind of general apathy of strata owners towards the properties that they own. What I would say to owners is that you are in a lot more control of the industry than you realize. The management contracts are 1, 2, and 3 years, and management agencies are going to respond to how you vote when you vote on their contracts. If you continue to vote for the status quo, then management agencies will provide the status quo. If you vote for change, then management agencies will provide change. What you need to think about as owners is what that change might mean, and what managers really can do for you, and how much you really value that. If all you do is you value the cheapest price possible from managers, well, I expect that's what the industry will provide you with, and you'll get kind of fairly substandard services as a result. What I think we're going to talk about a lot today is that, managers are really probably underpaid and undervalued for the actual work that they do. And they have to demonstrate that to owners by providing good quality services and by providing trustworthy services, which historically many owners may not say that they haven't received that, but in the future that's what they have to do. If owners really want those better quality services, they need to support managers by voting for companies that provide that and accepting that they're going to have to pay a certain fees in exchange for the services provided. So we're at a point of change, but it's going to be a two-way street. It's not just the focus just can't be on managers to make all of those changes, and the focus won't just be on the legislation to make all of those changes. A lot of the emphasis is going to have to be on owners and how they respond. Yeah. So that's what I think is going to happen in the next few years.
Excellent. Thank you so much, Will. Thanks for sharing. So next we welcome Strata Management Consultant and Researcher Michael Teys, an advocate for raising industry standards. Michael believes that strata managers must clearly demonstrate their value to justify higher fees. Thanks, Michael. Thanks for joining us.
Thanks, Nikki, and hello to all of the people across Australia online. I'm noticing little difference in the way strata management fees are structured around Australia. Melbourne-based fees might be a little bit higher than others, but overall, everyone's working on the same model of base fee, fixed disbursements, and insurance commissions. The offerings that are being made around the country are terribly homogeneous in that most people are simply describing services, and I take issue with William's point that people have got to be convinced that they're being given good service. What people have to convince owners about is that they're being given outcomes and value. And we've got to start selling value rather than listing the services that we do. I'm noticing a few of the younger management companies are building their businesses on the basis that insurance commissions are not included in their fee arrangements. Insurance commissions has taken a disproportionate position, I think, in this whole debate. The debate about strata management fees and sustainability of strata management is much bigger than insurance commissions. It's one part of the debate, but it's not all of it. My main message to the strata managers that are listening today is that they have to do more than whinge and whine about not being paid enough and not being respected by owners. The strata owners of Australia are not going to wake up tomorrow morning en masse, despite what strata managers say on LinkedIn, and say, oh my God, I need to pay my strata manager more, and I will immediately convene a meeting to that effect. That is not going to happen. Respect is earned, not demanded, and professionalism, when one becomes a profession rather than an occupation, comes about because of the judgment of the public, not because of a government licensing scheme, and not because of any professional standards scheme, which is a toothless tiger and actually only exists to limit liability rather than do anything else. So these are the things that strata managers have to take responsibility for. They have to take responsibility for differentiating themselves by showing the public how they're different, what they do, how they can do it differently, how they become specialists in particular types of buildings at particular stages of life. These are the things that demonstrate value, not just listing what people do. So in my view, Nikki, the answer to this question, what is fair and what is sustainable, is simple, but it's not easy. Simple, but not easy. Strata managers have to become better at telling their story. They have to become better at telling people what they do, why they do it, how they do it, and what outcome that has achieved. And this comes down to daily action. It comes down to things like detailed invoices at the end of each month. And don't pay yourself. Send it to the committee and make them read it, understand it, and authorize it. It comes down to detailed presentations at the end of a contract term about why the contract should be renewed and why the fee should be increased. We can learn from other professions about how they do this, particularly financial services, who have gone through similar troubles and have also faced their crossroad. but have emerged better and stronger for that process. So whilst I'm frustrated at the level of the current debate, I think we need to look at these things and approach it with eyes wide open to the rest of the world and to the way other people have done this, and to navigate it and to be brave. Strata managers need to become brave. They need to be able to say, no, I'm not going to do that work. No, I'm going to do that work, but only if I'm paid additionally. And no, I'm not taking you on and I won't be treated badly by you. Thanks, Nick.
Excellent. Thank you so much, Michael. Okay, next we'll hear from Luke Downie, Head of Strata and Business Development Management at Realmark Strata. Luke believes that strata commissions create a barrier to professionalism and transparency. Luke, thanks for joining us.
My perspective on the current attention, or I guess what some people perceive to be negative media towards strata, is it's what we needed. It's a good thing. It's drawn focus on potentially an underlying problem in relation to profits in our industry continuously driving. If you look at the Macquarie Bank benchmarking reports, year after year for the last 5 years, net profits in our industry across the country, not in any particular state, have continued to dive. So the whole conversation around commissions has brought that problem to the surface. And yes, commissions are certainly something that needs to be considered, whether or not it is ethical for strata managers to receive commissions or not. But at the end of the day, what it has done is brought attention to the fact that we have to change what we're doing. We've had a business model in strata management, which is a per lot, per annum fee structure that has worked for a long period of time, but our industry has changed. The role of the strata manager has changed dramatically in the respect that in the old days, you were pretty much a processor. You would organise meetings, create minutes, organise works. It was a very limited role. Nowadays, the strata manager is a financial advisor, they're a project manager. There is so much more complexity to the role of a strata manager in this day and age, which puts pressure on the strata manager's ability to perform their functions. The fee structure or the business model that has existed for so long no longer works. And I think the whole conversation around commissions is making strata management firms look at the way that they make money. Because of that, I think it's the perfect opportunity not only to abolish commissions, because we are in a position in our industry where we do need to relook at what our business models look like and how we run our businesses. So it's the perfect opportunity for us to get rid of commissions and then look at how we go about raising management fees and how we go about getting the profits back to where they need to be. Now, one of the biggest problems here, which has already been highlighted in today's conversations, is how does the public perceive the value of the services that we are offering? And to be honest with you, at this point in time, I don't think that that perception is all that great. Part of that problem is ourselves. We need to, one, value ourselves first and foremost. So the biggest problem with agency at this point in time is that we continue to fight to the bottom in terms of fee structures. We need to consider our own worth, understand what that worth is, and set our fee structures accordingly and stop fighting each other to the bottom. The reality is that low strata management fees result in strata management portfolios that are far too large for strata managers to handle. Now, the biggest problem with that is that's what directly affects that impact in terms of the public's perception of our industry. And if we want to be considered a profession, then we need to address that problem. In order to address portfolio sizes, we need to take a good look at the business structures. And my view is we need to move away, and we shouldn't be afraid of changing our business models and moving away from a per lot per annum. The reality is that, and I'm sure any strata manager that's listening today would agree, that in every portfolio, there are certain businesses that are certain strata companies, that are more demanding than others. They take up more of the strata manager's time, and essentially they are the ones that potentially put impact on your bottom line. So my suggestion to agencies is to look towards a user pays model. Time billing, I feel, would be a far better way for us to address this issue as an industry. But the reality is that the industry needs to have this discussion, and we need to shift together. So we all need to get onto the same page in regards to how we address the problem. But my belief is that it starts with readdressing the business model and then having conversations with the end user. The reality is that we don't talk to the clients enough. We don't talk to them about commissions. We don't talk to them about fee structures, and we don't talk to them about what we do for them. We don't give them a good understanding of exactly what it is we do day to day for them to be able to appreciate the services that we provide them. So in my opinion, we need to start, as I said, looking at the business model, having conversations with our clients, and start to move towards an alternative business model. Thank you, Nikki.
Excellent. Thanks, Luke. Leanne Habib, Chief Executive Officer at Premium Strata, offers a different perspective on insurance commissions, suggesting a revision of the current model. Welcome, Leanne. Thanks for joining us.
Thanks, Nikki. Looking forward to talking through some of the slides that I've prepared today, and just following on from some of the speakers of what they've said. I think it is important, most certainly, to let the owners know what our scope entails. I thought seeing the hot topic is insurance commissions, and I do agree with both sides, but today I'm presenting on the other side in terms of if commissions were banned. But I want to first walk the audience through why insurance commissions are in place, because there's a lot of consumers that don't necessarily understand why commissions are paid. It's paid for the insurance services that the strata manager also provides and contributes in assisting, but it's also for decades subsidised lower management fees. But meanwhile, our scope as strata managers has increased dramatically over the years. This is just a screenshot. I'm not going to go through each one, but this is just a screenshot of all the tasks a strata manager does in relation to insurances only. Forget all the other tasks and all the other functions and duties. This is just in relation to insurance services. For me, I think if we are going to revisit banning commissions, I just wanted to highlight some of the impacts that could have, and it will have an increase on costs. Strata managers would need to raise their fees, because at the moment, strata managers are receiving an agreed fee plus commission, and then some will have the other Schedule Bs, C and D. So in other words, the agreed fee is collectively a base fee, Schedule C, which is insurance commissions, Schedule Bs, which are additional charges, and D, etc. So if insurance commissions are abolished, then fees are going to have to be increased. And I know that they're going to have to be increased regardless, because of the current fees not being in line with the scope of works that I'm going to touch on. But my main concern is our broker commissions will remain unaffected. The broker will still retain their commissions. So premiums, in my view, will not change unless it's mandated. And that's something that is yet to be confirmed, part of this whole review. If they ban commissions for strata managers, are the brokers going to reduce their fees so the consumer gets the end saving? But the other risk for me is steering consumers towards the lowest price. Consumers, again, can be misled to going to the lowest price, and therefore not going to be serviced by those managers that are not pricing the job accordingly, because they have no intentions of providing the service at that professional level. So in the whole process of banning commissions, for me, it's going to either come out of the right pocket or the left pocket for the consumers, i.e. they're going to pay the loss of commission by way of an increased service fee, whether it's a Schedule B by time, whether it's an increased base fee. But I think government really needs to consider how the broker's fee will be reduced to ensure that the consumer receives that saving. The issue with commissions is obviously, the revenue stream that the strata managers have relied on for decades is crucial. It's not a matter of just removing and abolishing commissions and strata agents not charging for that lost revenue. You will just see a lot of businesses unsustainable. So for me, it's very, very important that if we are considering to abolish commissions, then consumers need to understand and accept that they would be paying a higher fee in management fees, not only to bring the fee where the scope is, but also for the loss of the commission that managers have relied on decades to compensate the and subsidise the lower management fees. It also allows consumers to choose between higher management fees with no commission or lower fees with commission. Let it be the consumer's choice, is what I think. I'll give you an example. We had 2 schemes this week, and since the ABC report, a lot of consumers are a lot more savvy, which I love, and it's great, and we encourage more. They're now asking for a fee proposal with commissions and a fee proposal without commissions. In just this week, I had the 2 that I gave 3 options where it's base plus commission, it's the agreed fee rebating the commission, or it's the agreed fee with no commission whatsoever. Both those clients went with option 1, which was the lower management fee with commissions. So it's going to come back down to consumer choice. Not everyone wants to pay a higher management fee, but not everyone wants their strata manager to receive a commission. So I think rather than mandating it, let it be a consumer choice. But definitely have more transparency, disclosures, and how do we handle the conflicts of interest? I feel it should be a decision for the owners corporation. No managing agent, in my view, should be left with exercising their delegated function to make a decision regarding insurances or any decision where they have a conflict. That's where the delegated full authority should be limited and mandated by government. But just touching on what some of the speakers have already said, the Macquarie Bank benchmark survey shows that the revenue per lot is about 1% per year. That is below inflation. And you can see that chart that I've got up on screen. It hasn't even, our revenue since 2005 hasn't even doubled over 17 years. Hasn't even doubled. So let's put the commission aside. Even without commissions or with commissions, our fees are not where they need to be pursuant to the scope, and I'm going to touch on that. The increased scope of services has dramatically grown. I've been in the industry now for 24 years. When I first entered Strata 24 years ago, it's very different to today. 24 years ago, we paid some invoices, we might have met occasionally, had some meetings. Now, legislation's far more greater. You know, the complex are a lot more larger, bigger, different type of schemes, CAs, neighbourhood, BMCs. They're not your simple Strata 101 walk-ups. So the scope is a lot more greater. The one thing I just want to advocate, what I'm advocating for, is to have fees match the level of service. Look at the size portfolio. I believe we need to have smaller size portfolios. We can't have large portfolios like what we had 20 years ago. They need to be smaller. They to allow strata managers to do more of work that they're now required. The scope is increased. You can't look after too many lots anymore. Look at limited delegated functions around conflicts. Don't give a managing agent full authority where there is a conflict. Transparency is crucial. Let your clients know what you're doing. The more detail, the more they understand, they're more likely to support. Copy them in on absolutely everything you do. That's how they see value. That's what we do. I blind copy in my strata committee on everything I do. They can see it firsthand.
And Michael Kleinschmidt, partner and legal practitioner, director at Bugden Allen, is a vocal proponent of raising the bottom, advocating for an industry-wide shift towards a fairer pricing model that ensures the financial sustainability of strata management companies. Thanks for joining us again today, Michael Kay.
Thanks very much, Nikki, and thank you to LookUpStrata for running today. I just want to pick up on something that Will said right back at the beginning, and that is, you know, it hasn't been that great a year. I have a lot of friends and colleagues who are strata managers that have felt the pain this year. And one of the things that I like to say is never waste a crisis. There are inroads being made in relation to this issue of sustainable remuneration for strata managers. Now, sustainable to me means that lot owners get what they need and they want. Strata managers can run profitable, stable businesses with normal effort, and neither the government nor the media is concerned about widespread, unfair, or even corrupt business practices. Now, by that definition, in my view, we're never going to achieve sustainable remuneration whilst we have what I call conflicted remuneration. And the number one form of conflicted remuneration is insurance commissions. Why? Well, it comes down to this. It's something that's rotten in the heart of the current model, and it's about conflicting duties between your own interest and the interest of your first master, which is your owner's corporation or your body corporate. Now, if I'm a strata manager, my first loyalty is to my owner's corporation because I'm their fiduciary and they have a special trust and confidence in me. After all, they trust me with all of their money. Now, if I as a strata manager are paid by a third-party insurer or a broker, or even a special purpose vehicle which is being used to hide the commission so that I can say that I don't take commissions, then my loyalty is to the person paying me that money. As soon as I have two masters like that, I have divided loyalties. And once lot owners and strata bodies corporate understand that, they loathe it. They absolutely detest it. So that money that I'm receiving from my second master, the broker or the insurer, is conflicted remuneration. Now that bad remuneration, it's bad because it entices me to favour the interests of my other master and not the owner's corporation. It doesn't matter what jobs or work that I do to earn that money and whether or not they are for the ultimate benefit of my owner's corporation, there's still an irremediable conflict there. And no amount of disclosure or no amount of historical reliance upon those structures makes it right. Even if you are the best and most ethical strata manager around, accepting conflicted remuneration puts you in a position where you have to explain to your owners' corporations that even though someone else pays you to work for them, which job, by the way, you would never get unless you had the owner's corporation as your client in the first place, your loyalty is still going to be to that owner's corporation. It doesn't pass the pub test. Now, as I've said for some time now, strata managers should convert this conflicted remuneration into unconflicted remuneration. If you get paid commissions to do claims processing work, and yes, I'm aware of Dr. Nicole's 47 jobs that strata managers do to receive their insurance commissions, just take claims processing. If you're receiving the commission to do that, well, then stop receiving that money from the second master and charge it as fee for service to your owner's corporation. All right? That remuneration for doing the same job is 100% conflict free because you're doing the work for your owner's corporation. Now, the rejoinder that I always get when I mention this is that owners are going to pay more. Well, I take issue with that just in relation to the insurance commission. One thing that I've learned in 25 years of practice is that the more middlemen there are, the more people are taking a clip. So as soon as we get rid of those middlemen, prices should come down. The other thing I'd like to say here very briefly is that to me, the SCAs have been missing in action here. Luke has been talking about different business models. There is something really simple that the SCAs can do. They can take a little bit of members' money, they can go out to some consultants and they can say, I want you to go and have a look at strata managers' businesses. And I want you to identify the tasks that they do in, say, New South Wales, or the tasks that they do in, say, Queensland. How many of those tasks are conducted for every single scheme? How many of them are typically conducted on a per lot basis? Put some time around how long those tasks take to perform. Work out some reasonable hourly rates to perform those tasks. Sensitize that data for things like service standards, normal service, above average, premium service. Sensitize for things like geographical location, because sometimes it's harder to get staff in regional areas, for example. And then sensitize it for the other factor, which has already been mentioned, and that is that some strata schemes are just a lot of hard work. At the end of that process, you get a report, just like the Macquarie report, but the Macquarie report is the tail wagging the dog. This report would be the dog wagging the tail. And rather than watching the race to the bottom, the SCAs could help raise the bottom so that everybody starts getting some fair remuneration. To me, no amount of disclosure or changes to the insurance arrangements, the commission arrangements, are going to do anything. And frankly, it's putting lipstick on a pig.
Okay, thank you, Michael. Thank you for your thoughts. And now we're going to Aaron Petrilli, Director of Property Recruitment Partners. Aaron brings a unique perspective to the discussion as he focuses on the human side of the strata industry. Aaron's insights emphasise the connection between the fair pricing models and a sustainable workforce. So Aaron, thank you for joining us.
Thanks, Nikki. Thanks for having me, and nice to be here. I'm just going to share my screen with you guys and talk to that a little bit. Obviously, I'm not a strata expert, and I'm here, as Nikki said, to talk as to what this looks like from a staffing and recruiting perspective across the industry. And there's certainly a crucial connection there. It's not groundbreaking news for any of the audience members, but a critical point that needs to be highlighted. And I think an issue is made abundantly clear off the back of the daily conversations that I have with strata managers each day. It's clear that the workload expectations placed on managers in a lot of cases, not all, but they're simply unmanageable. managers and general staff within the industry just feel overwhelmed and overworked, under-resourced, and it's been quite sad to hear a lot of the stories that I hear that they're on the brink of sort of burnout towards the end of their tenures. On the flip side of this, fortunately, over the past 6 months, we've seen a lot more and more companies finally addressing this issue and changing various aspects of operations within their business. Happy to expand on this later during questions as well. I think the very real impact of decreased fees ultimately leads to increased workload and stress, which Luke spoke to earlier on again as well. And I found it an interesting statistic on Macquarie's benchmarking report as well, which is also echoed regularly to me by my clients that touched on the fact that we've seen an average increase in revenue of around 21%. But unfortunately, and more critically, profit margins have decreased by an average of 10%. Low fees often require strata managers to therefore look after larger portfolios in order to cover their remuneration costs to the business. And I guess that feeds into a cyclical, unhealthy cycle of high turnover rates and diminished job satisfaction overall. So for businesses, the challenge is balancing fees with their service offering. And I think striking this balance between fees and value provided is crucial, as Michael also discussed earlier. How does the effective remuneration address industry challenges? The most important asset in any business is its people. I think we'd all agree on that. So strategic recruitment practices are essential in attracting and I guess importantly, retaining skilled and ethical managers. It takes both competitive, sustainable remuneration structures and a high level of continual professional development in order to attract the right talent to your business. Strata managers are looking to work with ethical companies, certainly off the back of being in the spotlight most recently. So this is certainly something that I'm seeing a lot of managers looking for when they're looking to make a move. As employers, we're looking for the qualifications. And what I see people doing in the industry that are doing it well is probably hiring based on core values of the business and really using that as a bit of a guiding compass as to hiring employees. And second to that, obviously, comes skill set, but that's something that can be trainable. Next thing that ties in is technology is another sort of key driver, and increasing efficiencies and lightening the workload of strata managers if this is implemented correctly as well. So this continues to evolve, and I think each business needs to take the opportunity to embrace it. It can be a tough road sometimes, a little bit bumpy, and I know there's often resistance from team members, but the results are there, the operational costs, putting money back in the pockets of the business, and importantly, also supports flexible working conditions. Another thing that's critical to the workforce now, flexible working arrangements, and I think a strong EVP are a critical employee value proposition in any business. If you don't have one, thankfully most businesses do now, but it's certainly something that staff want to see and staff want to buy into. And like it or not, flexibility is the cornerstone of today's workplace as well. I think if you're a business that doesn't offer this, simply you're missing out on talent. So creating a work environment that meets the needs of today's workforce is essential and expected. In summary, and after touching on some of the points that have been discussed previously, I guess looking ahead, the future of strata management hinges on a few takeaways from a recruitment perspective. It comes down to developing a compelling value proposition, really justifying fee increases, ensuring long-term profitability, and clearly demonstrating the value of what you do to your clients, focusing on process improvement, technology adoption, staff training, and within that staff training piece, I think developing a talent pipeline, which is something that businesses struggle with at the moment, given that we're sitting in a place where there's a huge talent shortage in the market. So I think it's imperative to introduce an L&D program to your business where you're building a constant pipeline of new strata managers, either internally or externally. But addressing these points, I think will go a long way to help creating a fair and sustainable future for strata management. So thank you all. And I look forward to continued discussions and exploring your questions.
Excellent. Thanks so much, Aaron. That was great.
Yes.
Okay, we'll move into the next part of the session where we've got a few questions to go through. So this first question is for you, Luke, to begin with. In light of recent events and growing concerns about transparency and ethical practices within the strata management industry, are strata managers adapting their business models, fee structures and service offerings to prioritise ethical conduct and better cater to the diverse needs and expectations of their clients? And what effect has this on strata management fees?
Thanks, Nikki. Certainly, the spotlight being put on commissions has brought attention to, or forced agencies to review a lot of their different fee structures. The reality is alternative income streams is something that all agencies have been looking towards in recent years, more so than ever before, because of declining profits. So undoubtedly there has been more focus and a review of practices from agency level in terms of looking at are our revenue streams ethical, are they fair and reasonable, and definitely more of a focus on disclosure. My opinion is that we need to go a step further, and I agree with Michael Kay in relation to insurance commissions. The reality is that no matter what changes we make, no matter how often we disclose it, it is always going to be a contentious issue. The reality is that by moving away from a commission structure will give us a clean slate in that regard. It will take the focus off commissions, and we can start focusing on the real issue here, and that is what are the level of management fees and how do we charge those management fees to our clients. So absolutely, there has been a focus on revenue streams, whether they are ethical and fair and reasonable, but it has been a focus that is definitely needed in our industry.
Okay, thank you very much, Luke. Michael, have you got anything to say about that?
Yeah, look, the managers' contracts that I'm seeing, there is starting to be a little bit of variability, particularly around the manner in which insurance is being handled, but the per lot model is still dominant. I neglected to say before, there's some really fantastic resources out there for people who are interested about this that LookUpStrata has done in the past. Michael's got some excellent material online. I've got a couple of articles online about this stuff. There's definitely places to go and read. So if you're a strata manager and you want to do something, you want to do things differently, there are some excellent resources already out there. Please go and read them.
And Luke, you've got something else to add there?
Yeah, I think one of the biggest challenges we face with moving away from the existing model is the perception of, sorry, lost my words there for a moment, being competitive in the market. So the reality is if single agent makes a shift when no one else is, then there's a lot more work involved in them being able to demonstrate the value of, because of the fact that they don't appear to be competitive against their opposition. So I think that is part of the equation. Yes, we need to look at it internally, but it is an industry-wide issue. The reality is that the only way we're going to resolve this is as a whole, not as individual businesses, in my opinion.
Okay, and Michael Teys.
In terms of the way in which we've seen business models adapt to lower profitability, we've had a lot of talk about insurance commissions. We haven't spoken much in this forum today about related party transactions, where strata managers own a share of a facilities management company or a law firm that's collecting debts or something else like that. Now, that's part of the issue as well, which I think is perhaps even less regulated than insurance commission and is really, again, holding back professionalism. The model that Leanne is arguing for is really more of the same. It's really just saying, well, let's do more disclosure. The thing about that is that whatever we're arguing about commissions and related party transaction fees, this issue will never go away. It will never go away because it's been around for the 40 years that I've been involved in strata, and it will continue to be a curse on this industry as it tries to become a profession. And it just won't go away by providing more disclosure, because strata managers haven't been able to deal properly with the disclosure regime that has existed. It's unlikely, therefore, that they're going to be able to cope with more increased regulation about disclosure. So, you know, disclosure doesn't fix conflicts of interest, as all of the strata lawyers will tell you. The Australian College of Strata Law, Kathy Sherry, Nicole Johnson, Hazel Easthope, all of these strata academics will be able to speak to the fact that disclosure helps manage conflicts. It doesn't eliminate them. To become a profession, we need to eliminate them. And it is only by elimination of insurance commissions and also related party transactions that we're going to get to that. So I think the thing is always going to be there unless we face it. And now is the time. Now is the time.
Thank you. Okay, this one's for Leanne. What is the suggested strategy for strata management companies dealing with competitors who underprice services to hold on to business or gain market share? What are the long-term implications of this and the eventual outcome for lot owners?
Thanks, Nikki. Look, my advice to managers when they have to compete with a low price is hold your price, because what's going to happen is the one that is coming in at a low price is definitely increasing their revenue, but they're not going to be increasing profits. We're all faced with the same overheads, resources, rents, etc. What they're going to be doing if they're coming in a lot lower is just have a larger size portfolio. And that's something that I'm advocating for very strongly. And it's something I've applied to my business practice, is having a small size portfolio. So when you've got another competing agent that's come in way less than you know automatically that they're going to have a large portfolio assigned to their strata manager. The strata manager is not going to be able to service that client. That client is then not going to be serviced and eventually are going to terminate their services. But for that agent that's coming in low, all they're doing is increasing revenues, decreasing their profits, but increasing their risks and liability as a business, because they're not going to be able to service the client's needs. And in today's market, with today's legislation and obligations, there is no mucking around. It's a bit like getting in a car and think that you can just play with the car because it's a toy car. It's not. We're now in the driving seat. We have an obligation. We have strong responsibilities on behalf of these owners. We can no longer afford to take on a client and just lump them into a portfolio and turn a blind eye and just be reactive. Smaller portfolios will allow you to be proactive. It will allow you to give the leadership, the communication, all those skill sets that is needed to manage a portfolio in today's market. And, you know, Nikki, you and I, we ran a survey with owners outside our database, and everything that relied on a system to do, such as financials, etc., got high rating. Everything that relied on an individual, like a resource to deliver, such as communication, leadership, advice, and guidance, got very low rating. And that just tells you that strata managers are time poor. Don't get me wrong, there are managers that need more training, but that's in every industry. There are good managers. There's also bad managers. That's in every industry. But there's no way that this industry is going to step up and deliver professionalism if we are still charging the rate we were charging 17 and 20 years ago. It's just not going to happen. So my advice to managers is price it accordingly, price it correctly, ensure that you are able to deliver the scope that you've priced, but also deliver the scope that you're obligated to deliver under your agency agreement. For the consumers, if it's going to be about price, you will indirectly end up spending money in another avenue because of the mistakes and errors that your manager will eventually make on your behalf. And one thing I will say to the audience, as I say to many, on average, what do we spend on our car insurance premiums to protect a car asset on average? 40 to 50,000. We spend at least 1,000 in premiums, and I'm being conservative. At the moment, we're not even spending that per lot on a strata manager per annum. And for me, your property asset is the most valuable asset in comparison to a car asset. If we're willing to spend 1,000 on average in premiums to protect a car asset, we need to start spending more on your strata manager to ensure that you are receiving the service you expect and you need to keep your asset maintained.
Yeah, we know that lots of owners out there are going to vote on price only, and they're going to vote on the cheapest price. What those owners probably need to consider is how do management agencies achieve lower prices. They achieve them by overloading their staff with super large portfolios that they can't really manage properly. The result is that those buildings don't get properly serviced, and then you get a lower quality building. It probably ends up costing you more as a building in the long run because you're not receiving the help and advice from a manager that can help you achieve cost savings. As a management agency, though, that's very difficult to deal with. It's really hard to, it's much harder to offer a good service model at a higher price versus a bad service model at a lower price, and deal with that competition. You have to just kind of hold firm, as Leanne says, and you have to sort of think that those buildings that choose the lower options, they're going to come back around to you in a year or two, because they're going to be very unhappy over the next couple of years of their contract from choosing that cheapest option. And eventually they're going to have to say, well, this isn't working out for us, and we've got to look at doing something different.
Okay, wonderful. And Luke?
Yeah, sort of just supporting both Leanne and Will there, but particularly surrounding standing firm on your fees. The reality is there seems to be a fear of missing out, where people will jump to lower their fees when requested to do so because they feel that they're not going to get the business. You're far better off getting less business at a higher price and having less work to do for the same money than competing on those lower priced managements. The reality is you end up with a better quality portfolio and much more happier staff.
Okay, thanks, Luke. And Michael?
I think the thing about lower fees is that not only is it a quick case of matching fees, but strata managers are very reluctant, in my experience, to put up their fee or to talk about putting up their fee when their contract term ends. And many will just simply put a rollover motion on the papers at the same fee as last time, or the same fee plus a CPI, rather than really taking the opportunity to say to their clients, look, this is how these things are working out. This is what we're in fact doing for you. We need to be paid more for that. So there's these opportunities all through the life of a client's experience with a strata manager to be talking about fees and to be having, what I call brave discussions. And strata managers can learn how to do this. Senior lawyers teach junior lawyers how to have discussions with clients about out of scope work, and have become very good at capturing that and being paid for it. So we can learn these things. This is the type of training that we should be having for strata managers, not teaching them how to be lawyers, not teaching them how to be engineers, but teaching them how to be business people and to ask for and get more money for what they do.
Given the current tension between lot owners' desire for affordable fees and strata managers' need for sustainable pricing to ensure service quality, how can lot owners actively participate in shaping a fair and transparent fee structure that balances both affordability and value within their strata schemes?
For lot owners, you really need to learn and understand how your management contract works. Most people have got very limited idea of how body corporate management agencies' contracts operate in the real world. Typically, most of them have a limited set of agreed services, and then a lot of the other services that we provide can be charged at hourly rates, and a lot of owners just don't really understand that. They just sort of think, well, we've paid you a base service fee and that covers everything. So I think it's pretty important that owners take the time to read those contracts, understand them. If you're not happy with parts of those contracts, by all means, question your managers about them, see if you can have them changed. If managers aren't happy to do that, you can look at alternative companies and all the rest of that kind of thing. But if you don't understand the contract to begin with, then you're probably going to have an unhappy experience as it goes along with. The other thing that owners need to do is consider really how much time it takes to manage your building. You might not be aware of that in totality, because you might not see how much time and energy a manager puts into managing your building behind the scenes. But is your building an easy building to manage, or is it a very hard work building to manage? Do you have committee members that are in conflicts with each other, or owners who are causing problems? Do you have major defects? Do you have constant repairs that need doing? If you're having to come to your manager every day with a problem, well, it's going to cost you a lot more money to manage that building, because it costs the body corporate management agency a lot of time to manage your building. On the other hand, if your building's well organized, and especially if you have a committee that's really well organized and that can handle a lot of the internal functioning of the building itself, well, then that should cost a lot less money, because you are putting less demand on your body corporate manager. But a lot of people just aren't very realistic about the real time it takes to manage their site.
So this one's for Aaron. How do low strata management fees impact the daily work lives and career prospects of individual strata managers? What challenges do they face regarding workload, stress, professional development opportunities, and job satisfaction?
Yeah, thanks, Nikki. Good question as well. I think we probably touched on this to some degree, but obviously low strata management fees equal low remuneration or an increased workload. So increased workload means that we're sort of feeding back into that cyclical pattern that we've seen over the past few years of eventually leading to burnout. So I think that's what low strata management fees do in terms of impact. Challenges that they face regarding workload, stress, personal development opportunities and job satisfaction all kind of flow into that as well. You know, if the money's not there in the business because they're not charging the fees in the first place, it's not that they don't want to reward and remunerate their staff or spend money on training and development. It's, the money's simply not there to do it. So if the fees go down, the companies aren't making the money to spend that they need and they want to spend on their employees. Yeah, I think that covers it off.
Okay, thank you. Anyone else want to jump in on that one?
Yeah. So I think the other side of that is the reality is with what Aaron's been talking about, there's been a considerable number of very experienced and qualified strata managers leaving our industry in recent years. With the increased workload and the burnout, we're losing talent. Now, the impact that has not only on individuals, but from a profitability perspective for business. There's less strata managers, the average wage or salary of a strata manager is increasing, and the experience to be able to provide that higher level of service is not necessarily as available as it was a few years back. So there's a huge impact there as well.
Okay, thanks, Luke and Leanne.
Yeah, just to echo what Luke has said and Aaron, absolutely. And this is why it's more crucial for agents to increase their fees in line with the scope, because again, you're setting yourself up to fail. And it is a disincentive for good strata managers. We are losing good strata managers, but we're equally finding it very hard to retain and recruit good managers, because a lot of people say, okay, I want to get in the industry. They get in and they actually realize how much workload there is. And I say it's 20% strata management, 80% is people management. And the people management is the toughest part of the role, because you're managing different views, different personalities, conflicts between people. So all that requires time. And with our construction industry having its own issues with defects, the new developments that we take on come with their baggage and more workload. Then if you look at your existing older buildings, they also come with their baggage and workload, because then they have to go through remedial repairs, upgrades. So again, I go back to my point. What we did 24 years ago is nowhere near what we're doing today. So the fees need to come up in par with what we are offering in terms of a service, a professional fee for a professional service. And that's how, going back to Michael Teys' point, you will earn the respect, because you're able now to service your client to then justify your fees. But you can't increase your fees and deliver less. You have to deliver more to receive and be paid more.
Okay, thank you, Leanne. Given the variation of strata regulations, property markets and client expectations across Australia, how do strata management fees differ between states? What successful practices or innovative fee models from specific states could benefit others? Furthermore, could greater collaboration between non-competing strata management firms, perhaps facilitated through industry bodies such as SCA, foster knowledge sharing, best practice adoption, and a more ethical and sustainable industry?
Thanks, Nikki. A quick answer to the first part of the question about innovation. There hasn't been any. We're still doing strata management the same way we were in the 1970s, and that's got to change. It's got to change because communications change, client expectations have changed, and the level of complexity and government regulation has changed. Yesterday, the New South Wales government tabled another reform bill, which I've written about this morning on LinkedIn, contains 11 things that I've identified that will increase the workload on strata managers in New South Wales. These things do tend to have a habit of creeping then across borders to other people. But, you know, according to the new laws in New South Wales tabled last night, there'll be compulsory education for strata committees. That's going to make it harder to fill committees, and strata managers are going to have to manage that process. There's duties on the chairperson to conduct meetings in a fair way. That's going to resonate with strata managers who often chair meetings, and is an absolute lawyer's picnic. Michael Kleinschmidt will be putting on more staff immediately to be able to, well, he's practicing in Queensland, but his firm in New South Wales will be putting on more staff to deal with the litigation that's going to come out of there. So we need to innovate the business model and the way in which we operate. But I want to say something about SCA. Michael Kleinschmidt touched on SCA being missing in action, and it has been. Let there be no mistake that the pressure that we are under at the moment has come about largely because of the conduct of the board members of the former board members of the New South Wales SCA chapter. That's what's brought this attention, and the media attention is not going away. I wish the new board members of SCA all the very best, and I offer my support to them in cleaning up the industry. But if they do the same thing, if they propose the same model, if they propose insurance commissions and related party transactions with greater disclosure, then we're going to get more of the same. One of the essential things we learn from professionalism and from other entities that have gone through professionalisation is that a strong national body is absolutely one of the 5 essential criteria for a profession to emerge. And at the moment, we don't have a strong national body. It is a fragmented federation. And I wish that it wasn't. But if SCA keeps doing the same things that it's done in the past and doesn't recognise the problems that have been caused, and it has caused, then we are in for more troubled times.
Okay, thank you, Michael. And Leanne, you've got something to add to that?
I do. I just wanted to obviously respond to the comments about SCA. I think we do need to give credit to those members and board members who are long-standing and made some great changes, such as making New South Wales part of the professional standard scheme. But most certainly there was some that, are questionable. But I think the focus is on having a new board now and looking at a new way forward. But equally, if we look at the Four Corners story, there were a lot of activities and behaviour from agents that were not members of SCA, because SCA took the appropriate steps and banned them. But it's, in my view, that our legislation let us down. And fair trading, I always say that, we have a bite, but where are the teeth? So, we need to ensure that it's not just all up to SCA to govern its members. We also need fair trading to have more resources. And personally, I think our property commissioner doesn't have enough resources. You look at the building commissioner has been given an army to get out there and clean up the industry. And I think our property commissioner needs to be given the same. And if he is given the same, then there could be real change. And again, I say, instead of suffocating the industry with more legislation where it's not needed, don't get me wrong, there's parts of it that are needed, then the job can be done without being overwhelming. But let's have our property commissioner and their team enforce compliance and pull up the ones that are doing the wrong thing. But let's not crucify all the ones that are doing the right thing, because again, it becomes a disincentive for good strata managers. The job becomes too big to deliver, a bit like the aged care facilities, over-regulated, overpriced, government had to step in to fund it. Don't be surprised if strata doesn't head that way if we don't start taking a practical approach and not always the legal approach. So for me, I think fair trading, property commissioner, government, if anyone's listening, let's allocate more resources to that property team, because they're going to need a lot more to get out there, be the eyes and ears and enforce compliance. Having rules is one thing, but who's enforcing them? Instead, we just continue to pass more legislation. And like I said, we need it in some areas, other areas it's over-regulated.
I find myself in agreement with the latter part of Leanne's answer, that legislation is not the answer. And what we've seen yesterday from the New South Wales government is new levels of interventionist behaviour in the way in which people live in private property. We can't legislate to make dumb people smart. We can't legislate to make bad people good. We need to look at culture. We need to look at principles of governance that apply in other parts of the world and other parts of business. And these are the things that will drive change of behaviour, not over-the-top legislation trying to account for every thing. And I think there needs to be some accountability brought to bear on the lobby groups that keep asking for these things. They're going to government thumping the desk saying, we need a law for this, we need a law for that, we need a law for this. They're the same groups that then complain about strata managers and their service delivery and price. I think there needs to become a responsible discussion had about, if we're going to have these things, let's test them rigorously with some independent research, not just lobbying, but some independent research to demonstrate whether these things work or not. Nicole Johnson's written a fabulous paper on the way in which law reform in Australia is reactionary to lobby groups and not based upon academic, rigorous research about whether things work. Every time we pass a new law, we should cross one out, have a look at something that hasn't worked and drop it, and just stop this this absolute fool's errand that we can legislate everything to be right.
Thanks, Michael. And Michael Kay, you've got a comment as well?
Oh, just two brief ones. The first thing I'll say about the bad year that's been had, if the existing laws were adhered to, it wouldn't have happened. All right, we have a whole body of common law and equity, including fiduciary law. If that had been adhered to, as other professions recognise and build into their culture and their means of operating their businesses, then it wouldn't have happened. So the proof's in the pudding. The second thing is that it's an observable phenomena that enforcement is what's missing. I have now for a number of months been talking about the concept of a strata cop. It'd probably bring a smile to Michael's face because that's what we were talking about at the last conference down on the Gold Coast. It is missing. In Queensland, for example, we have a wonderful commissioner who produces a dispute resolution service, publishes the decisions and provides education, but no enforcement. Enforcement is a common element that's missing across the jurisdictions, and it needs to be enforcement with teeth that is well-resourced, that is out there doing what needs to be done. And, until that happens, then the bad apple syndrome is going to continue to occur.
Okay, thanks, Michael. Another one for Aaron, recognising that individual strata managers often operate within the constraints of their firm's business models and fee structure, to what extent do they possess agency in shaping pricing and ethical practices? Are there instances where strata managers prioritise life considerations, accepting lower pay in exchange for a perceived better work-life balance or culture? Moreover, do strata managers fully grasp the power they wield, both individually and collectively, to drive change within the industry by choosing to work for firms that prioritise ethical conduct and clients' interests?
Yeah, quite a bit in that question. I guess answering to the first point, in terms of agency and shaping practices, I think the reality is strata managers have limited influence over pricing and business models, but they can certainly advocate for, and they should be advocating for, ethical practices within their firms. That should be done right across the board with every team member. When it comes to lifestyle considerations, I think many strata managers, they absolutely prioritise work-life balance and company culture. And yes, some of them will accept lower fees as well, lower remuneration for better working conditions. So in lieu of that. But at the end of the day, I think, it's expensive. Cost of living is going up. And I think that's a fine balance. So yes, they will make subsidies, but not to a huge extent in my experience. And then when we're talking to the collective power, I think strata managers, both individually and collectively, again, can absolutely drive industry change by choosing to work for firms. And I'm seeing more of this. People are being very selective around where they want to go, as they should be, because they're looking to work with companies that are big on ethical conduct and client interests.
Okay, thanks, Aaron. Great to have that insight. And Michael Teys?
Nikki, I was just going to say in response to Aaron's point, I think strata managers, employed strata managers, are voting with their feet and they're leaving the industry. And that's a problem, or they're leaving offices thinking that they can find something better somewhere else and getting disappointed when they get there and it's the same. So we really need to look at the pressure on strata managers, receiving the 150 emails overnight from angry people is a really, really unhealthy way to start the working day and is distracting them from getting their real job done. So we need to really be careful about the workforce that we have and start caring for them and reducing their portfolios and giving them better systems to work with. I'm not talking about computer software that does accounting. I'm talking about workflow systems. How do you reduce the number of emails, and the amount of time it takes to resolve a repair and maintenance issue. You know, these are the things that we need to be focused on as an industry. These are the things that other bodies can help work on, but they're very practical, very at the coalface stuff. And it's not this esoteric debate. It's not, you know, going out and again to be critical of former associations. You know, golf days, boat days, all sorts of other play dates are not helping strata managers at the coalface deal with their work. We need to get real about giving them some tangible tools to help them do their job and get home so they can read a story to their kid or pat their dog or talk to their partner.
Absolutely. Yeah, I would agree with that. Yeah, well said, Michael.
Thanks, Michael. And Will, you have something to add to that as well?
I just think that managers probably have more power than perhaps Aaron indicated. There's a real shortage of good managers. Probably there's a shortage of bad managers, to be honest with you. It's endemic in the industry. There aren't enough people who are trained and who have the capacity to do the job, and that gives those individual managers who really have that ability to do it quite a bit of power in their workplaces. They don't always exercise that, or they might not always realize that they have that. But I think if they put pressure back onto their management teams to perhaps reduce workloads or introduce more ethical practices, those management teams will have to listen, because if they can't find the staff to do the work, then they're going to have real troubles as well. So I think there is quite a lot of capacity for managers to put their hand up, and if they're not happy with how things are in their workplace, just say, look, I want some change. We need to start working on that together.
Okay, Michael Kay, the David and Goliath of strata management. Can small firms compete? As large strata management firms consolidate their market share through acquisitions, potentially leveraging economies of scale and broader service offerings, what strategies can small boutique firms adopt to remain competitive and attract clients seeking a more personalised and specialised service experience?
Yeah, I think the first thing to say is that we've got to remember that David won in that particular battle. And the thing that I like to say, you know, I started up a very small law firm, and I went through this. I had to compete myself with other large organizations. And small strata management firms can be everything that large strata management firms are not. Now, this is not better or worse. I provide services, my firm provides services for all different types of strata managers. So competition is a normal, healthy thing, and we should have a good, functioning, competitive market, okay? Now, putting aside the first and most important sort of elephant in the room, and that is things like misuse of market power, which other agencies are responsible to deal with. So let's assume that that's not occurring. When you're then looking at how do you compete with some of these larger organizations, well, you can be everything that they're not. You can be more responsive, you can be more flexible, you can provide a more tailored product. You can provide, you know, different pricing structures. You don't have to rely upon and use the law firm that paid for the training day that took place last weekend, or the report writing firm that sent the directors to Bali for their last holiday. You don't have to, you know, one of the things that these larger organizations look for, of course, is growth in profits year on year, as opposed to a sustainable profit, right? Now, I'm not saying that growth in profits is a bad thing. Indeed, you want to look for growth in profits so that if you lose part of your business offering, then you're able to make up for that. But you're not under the same sorts of pressures. So in this respect, do have a look at the last Macquarie benchmarking study, because there's some really good suggestions in there about how to do it. Make sure you've got some really good software. Make sure you've got some really good people and really good practices. Invest in your people, okay? Make their lives sustainable. And, you know, the premium or, you know, more expensive than the race to the bottom model tends to be the more successful model for these smaller practices and human relationships. You know, that's what I observe. Okay, so when I watch what's successful out there, I work with quite a few smaller firms that are very successful with what they do, and that they are some of the things that those firms do.
Okay, thanks, Michael. And Luke?
Yeah, I just want to add one thing to that for startup businesses in the strata management space, and that is you don't have to be the cheapest to attract business in our industry right now. The reality is that a lot of startup businesses feel that they have to start out cheaper to attract that business. I would suggest that's not necessary.
Okay, thank you. And has anyone else got anything to comment on regarding that point?
I think small firms definitely can compete. What you're seeing at the moment is a huge proliferation of the industry. You know, you've got buildings that go from 2 lots to 2,000 plus. That's a huge number of opportunities within an industry to offer sort of slightly different, more tailored, more individualized services. And that sort of suggests that there's a lot of space within that for small firms to focus on a specific area, stick within that area, and then provide that service to the customers who want that. I think the more the industry grows, the more you'll see small firms providing that type of service to their customers.
Okay, and while I'm with you, Will, I'll ask the next question. How can strata management companies provide a clear and comprehensive breakdown of their fees to lot owners? What information should be included in this breakdown to ensure transparency and understanding? And should standardised forms for quoting services be implemented?
That is quite a tricky question to answer. I suppose the answer is within the contract. Personally, when I look at sort of the standardized contracts, the SCA ones in particular, I find them nearly unreadable, basically. And I think that's a big problem for the industry, because if I'm finding them difficult to read, then I can only imagine what the customers are thinking. I think managers really have to kind of be much more explicit in terms of where they apply charges in their contracts and how much those charges are going to be. And then perhaps at the back end, we need to move to a system where all additional management charges are being sent to owners as invoices, the same as we send owners plumbers' bills and electricians' bills and all the rest of it. That's probably where you might sort of start to get a better level of transparency.
Okay, thanks, Will. And Michael Teys?
Nikki, just on the point of agreements, there's been a bit of chatter on social media about that recently. The SCA agreement in its current form in all states is unintelligible. It's 37 pages long. I saw one the other day that had 62 different heads of charge for disbursements, which is just oppressive. And the really crazy part about that is when I probed the strata manager about that, they only charge 6 of them anyway. So, this is just sloppiness. We just need to work through these things and make them simpler for people. The Unfair Contracts Act is going to apply in New South Wales as a result of these reforms tabled last night. And the SCA agreement won't pass that test. So we need to develop a new agreement. I hope SCA does it. And I hope it does it in conjunction with the Australian College of Community Lawyers and also OCN. The Law Society worked with the the Real Estate Institutes, to do a joint form land contract, which was fair for people, a joint form residential tenancies contract, which was fair for people, both sides. And I think we need the peak bodies to reach out to various groups that are respected and recognised and have different perspectives, to get something that all people can have confidence in. Strata managers can know that they can work with it confidently, and strata owners can see a pro forma that they can trust. I offer those comments to the group.
Would anybody like to respond to that comment by Michael T?
Yeah, Nikki, sorry, I'm wearing another hat. So I'm vice president, one of the 2 vice presidents of the Australian College of Strata Lawyers. We have made that invitation to a couple of different SCAs. There are obviously different things that you've got to consider in every state. But I think the SCAs have been dealing with this issue of how do we respond to the insurance issue, a la the Trowbridge reports. And then they've also then been dealing with, the fallout from the rest of the stuff at the same time. So it's understandable that they're a little bit flat-footed on the issue. And the other thing is too, that the agreement tends to bake in the business model. So I personally relish the challenge of putting together a simple agreement that was flexible enough to be able to cater for different business models so that people could adapt it. I mean, the resident managers in Queensland have some excellent resources where, there's a library where you can adapt the standard agreement to the different business models that are around. For example, a couple of years ago, when commission was uncapped in Queensland, a number of letting agents moved to a bundling model so that all of their costs and expenses, rather than those 67 heads of charge, Michael, could be picked up in a fixed percentage of the commission. And their agreement is flexible enough to cater for that. So it's a challenge because you want to have an agreement that is fair, simple, but flexible.
I mean, SCA, I can only speak for New South Wales. They are looking at the agreement, but they were looking at that agreement well before any issues were raised with it. So credit to them. And SCA does rely on legal advisors as well. So it's not like the intention was to put an agreement together that was all bad. I mean, what I've understood well before, joining the board, I've also always understood as a member of SCA that those agreements are vetted very closely by proper legal experts before they are issued to their members, because as members, we are relying on those agreements to be fair. We are also relying on those agreements to, for our business. That is our asset. Our asset are contracts. We don't have anything as a strata managing agent other than those contracts. So, and the fact that, members are using that agreement, we're trying to standardise it so that, the terms are fair and equitable for both parties. It's got to be fair for both, in my view. But just in short, I just wanted to say that I believe SCA New South Wales are looking at releasing a new agreement, and those wheels were in motion well before any ABC report about the agreement.
Okay, thanks, Leanne. And Michael Teys?
Well, they might have been in motion before the Four Corners story, but it hasn't been released. We haven't seen it, And as to the preparation of it, it was done by the SCA sponsors, who are lawyers, that in itself is a problem. What I'm talking about is raising the standards above your own interests, above the interests of that organisation, and having it done by people like Michael and others that are willing to contribute and develop something that is truly robust and fair. There is, on no view of any lawyer of any credit, is the current agreement fair. It is one-sided in so many respects, and apart from anything else, you just can't understand it. It's too many cross schedules. It doesn't pass the test. So, this is an easy win for the new board of SCA. This is an easy win. Get out there and cooperate with other people. Don't do it yourself. Don't let your sponsors do it. Get out there and participate with other people and get something fair to the market.
To say, Michael, I don't believe it's just the sponsors that have looked at it, but I won't say any more because I'm not here representing SCA today. But I will say that it has been reviewed beyond sponsors.
Okay, thanks, Leanne.
Then you need to get new lawyers.
Thanks, Michael. We'll take that back to the board.
Okay, we might just wrap up with one final question. I'll start with you, Luke. What are the practical challenges and benefits of implementing a standardised schedule of tasks and pricing structure for strata management services?
I guess one of the main challenges is actually capturing everything that a strata manager does is certainly a substantial task. I think the existing agreements that we see really don't cover it. The challenges I feel in terms of capturing and coming up with an alternative pricing structure is ensuring that it's done from an industry whole perspective. I think that as I said before and earlier, in terms of the changes that are needed, we need to approach it as an industry rather than as individual businesses. Secondary to that, I think we need to have some communication with our clients to ensure they understand the tasks that we do, and that they are captured in the agreements, and that they have an understanding of the time that it takes to perform those tasks.
Anybody else like to jump in on that one? Leanne?
Yeah, I was just going to say, just following on from what Luke said, I think it also needs, government as well, all the owner advocate groups and organisations to also educate their consumers on what a strata manager's role entails, as much as it is the responsibility of a strata manager too. But as managers, we want to be spending our time managing the property instead of, constantly explaining what we're doing and why we're doing it. So I think it's important. It's team effort. I think with everyone coming together and explaining the role of a strata manager, it's going to allow the consumers to understand the scope that we are providing.
Okay, thanks, Leanne. And Michael Kay?
Yeah, look, Nikki, everybody knows that I'm a really, really firm advocate of this. I think the SCA should be doing it. And I think it's their role. I agree with Leanne that individual strata managers are already pressed for time, but you have these peak organisations that can take some of the members' money, get that work done, have this fantastic resource to be able to show to lot owners, this is what we do. These are the things that we do. This is how long it takes, you know, and here's a fair pay to do it. I mean, why has this not happened? I called for this 9 months ago. Why has it not happened? And this is, I've got a lot of time and respect for the SCAs, whichever hat I wear, and I will continue to volunteer my time to help them out. I've been doing that for 20 years plus, but I am astonished that this has not happened yet, because it is, to me, it is the single best thing that they could be doing right now. They could reset the conversation, justify and explain the work that is being done, raise the bottom so that there's a reasonable expectation about an increase in pay. I'd love to see every strata manager get an increase in pay, and then Aaron's job becomes so much easier, doesn't it? All right. So for God's sake, let's just pull the lead out and do it. There's nothing to be afraid of.
Okay, thanks, Michael. And Luke, back to you.
Yeah, I think I agree, Michael, that our industry bodies are the ones that should be taking up this fight. But I just want to encourage anyone and everyone that works in our industry not to be afraid to advocate for what we do, and be proud of what we do, and not be afraid to have tough conversations. Communication is how we are going to educate people in regards to the role that strata managers perform.
Excellent. Thanks, Luke. And Will?
Yeah, just as a counterpoint, as someone who's running a strata business, I've got no interest in a report that provides details on standardized services. I'm interested in the individualized services my company can provide to individual strata schemes. And that's really what I want to focus on. Having some sort of industry average doesn't really help me provide that in any way, and I don't see how it benefits the customers in any way other than setting some kind of default standard that everyone would have to adhere to. I just can't see any benefit in it myself.
Yeah.
And Michael, would you? Oh, sorry, you agree, Leanne?
Yeah, because then you're going to be criticised for price fixing or criticised for, monopolising it, as they have done with a standard agreement. I mean, standard agreement you think has no harm, it's helping members. But the minute that something goes wrong with it, then you'd be criticised that you're trying to monopolise it. So I do think it's important that each business operates based on its business model. But obviously things are going to be, tend to be done similar, like in, the law industry, the accounting industry, etc. But yeah, I tend to agree with Will.
Michael Teys?
And Nikki, I think the point Michael Kleinschmidt's making is that a report of the type he's talking about will help on an independent basis make visible what is presently invisible to the public. And I don't think it's about, dictating standards. I think, in the same way that Nicole Johnson's report about insurance helped people understand what strata managers actually do in relation to insurance, a similar type of study could help people understand what strata managers actually do, because on their own and collectively, so far, strata managers have failed to do that. So, if we can spend some money to get an independent report to do that, then I think that would help a lot. And I hope that's the point Michael was making.
Yes.
And Michael, would you like to respond at all, Michael Kay?
Yeah, look, that's exactly the point. I've had the price fixing comment made before. No. For those people that are interested in this, I do have an article called Solving the Per Lot Fee Dilemma, which goes into some detail. And basically, all you're doing is providing that information about what you do, how you do it, and you start raising questions as to what a fair remuneration is to do those sorts of jobs. This opacity in terms of the job that is done, and the disconnection between the pricing model and the work that is done is what causes the problems, from my point of view. So, everyone has said you have to communicate your value. How are you going to communicate your value? You can use some nice marketing phrases, or you can use some data. I like to use data.
Okay, we might leave it there. We've come up to the end of the hour and a half. So thank you very much for those who have stayed with us through the whole of the session. And Michael, back to you again, Michael Kay, as the one who did call for this panel discussion at the end of that webinar we've just been speaking about on the per lot fee dilemma back in June. We'd like to invite you to wrap up the session, provide a concise summary of the arguments that were covered today.
Look, thank you very much, Nikki, and thank you to all my fellow panelists. I think you've done a wonderful job today, and thank you very much for participating and really making an interesting discussion. I'm going to take a few important things away. I think we peaked at about sort of 570 odd participants online at one point in time, which is just fantastic. And it goes to show that there are a lot of people interested in what you had to say. If I could just do the rounds very quickly, one of the things I took home from Will, very important point, is that lot owners have a role to play in solving these problems. I think that was a message that really sheeted home to me. Michael, being the seasoned professional that he is, had a wonderful catchphrase, which is, you know, the solutions here are simple but not easy, and there is nothing truer that could be said than that. You know, Luke, we really need to explain our role and to change the business model. You know, those things are crucial. Leanne did make an excellent point that, look, if you go playing around with insurance commissions, there will be consequences. That is true. That is absolutely true. And I don't dispute that. From my point of view, I had a bit of fun. We've got to get rid of conflicted remuneration. And from my point of view, playing around with disclosure in relation to insurance commissions is, as I said, just putting lipstick on a pig. Aaron, I'd really love to help you in your role by giving every strata manager a pay rise. And the fundamental point there is that you don't have a sustainable strata management sector unless you have strata managers. And you will not have strata managers unless you have an attractive workplace and a good remuneration model. And without that, without our staff, we are nothing. So that's a really important point from my point of view. So yeah, that's it from my point of view. And I think it's been fantastic. Thank you very much, everybody. And, you know, let's look forward to the new year and making some progress.
Excellent. Thanks so much, Michael. I'd like to say thank you to everyone that participated today. That's all of our panelists that came in. They take lots of time to pull these sessions together. There's lots of work that goes into the back end. So I thank you very much for joining me. Anyone that joined us in the audience today, I know there was a lot of chatter going on in there. And we thank you for your commitment and passion for the industry, everybody that's been here, because why else would you have stayed through the whole hour and a half of us talking about strata management fees? I did receive a number of emails this week from both industry members and owners leading up to this session who mentioned that they're disenchanted or they feel like they're losing faith in the strata industry. And we just like to say our message is don't give up. Good will work with good, and we'll knuckle down and make a difference and get things done. So hopefully this conversation has contributed to that. And as Michael said, we look forward to some change possibly in the new year and moving forward within the industry. If you gained value from this video, please hit like and subscribe to our YouTube channel. If you're looking for information about parking, strata insurance, defects and more, head over to lookupstrata.com.au or sign up to our free weekly newsletter via the link in the description box below.